How to identify a complex flat correction pattern like a genus. How to identify a complex flat correction pattern like a genus. Let's get started. This morning I have recorded a first video that I called How to Avoid Elliott Wave Analysis Mistakes. I highly recommend to trainers to watch that video so they may understand what we are about to discuss in this tutorial. Alright, so this video is a continuation of that video that I call How to Avoid Elliott Wave Analysis Mistakes. Alright, so this morning we have counted. So today, in fact, is the 7th of June 2016. Alright, so this morning we have counted 5 waves: first wave, second wave, third wave, fourth wave, and a fifth wave, followed by a double retracement. 1, 2, 3, 1, 2, 3, right here. Now we want to discuss how to identify a complex flat correction, a pattern like a genus. Now, before we continue, I want to clarify something which I talked about before, but I will say it again for new traders, okay? So when we're talking about a pattern, so I want to give one example of a pattern, for instance, a zigzag pattern, okay? So I'm drawing on my chart a zigzag pattern. This is a zigzag pattern, okay? Whenever we are talking about a pattern, now, I said this before, the reason why I'm saying it again, because it's too important, and as traders very often will make the same mistake consistently. But the trouble is that sometimes traders are repeating the same mistake over and over and over, and they don't even know that they are repeating the same mistakes. So that's why I want to talk about this again. Because we are discussing Elliott wave, we are talking about wave patterns, price structures. So now I'm talking about a complex, a flat correction pattern. It's a pattern. So the flat correction pattern, okay, is a pattern that is, we say, a double retracement: 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. So if you don't understand what I've just said, you need to go to www.24elliottwave.com and click on a flat correction. It's a specific pattern with a specific price structure. We have different type of a flat correction. I hope you like my drawings. Okay, I'm not very good at drawing, so I'm doing my best. All right. So 1, 2, 3, 4, 5 down. Okay, 1, 2, 3, 4, 5 down. This is not an impulsive wave. So the wave can overlap each other. It doesn't matter. Because it's a corrective pattern. Something like that. So you see 1, 2, 3, 1, 2, 3, double retracement, followed by 1, 2, 3, 4, 5 down. Alright? It's a pattern. Remember this. Remember this, my friend. When we are talking about a pattern, a specific pattern, that pattern is only that pattern if and only if that pattern is completed. So suppose you are here, you say 1, 2, 3, 1, 2, 3. So the first thing that is coming to your mind, you'll be thinking that, okay, it's a flat correlation that is developing. But it's not yet a flat correction until it becomes a flat correction. You know why? The reason is, when a price reaches this level, people will just sell and say that it's going to go down 1, 2, 3, 4, 5. But the next day they wake up, they check their trading account, and the price goes up like this, which means that pattern is not a flat correction, it's something else. Therefore, in order to avoid pattern trading mistakes, the pattern is only that pattern until that pattern is completed. So we're going one step at a time. So going back again to the zigzag pattern that we are drawing here. So when we see like this, 1, 2, 3, 4, 5, 1, 2, 3. Okay? So if you don't understand what I just said, you need to go to www.24 check the zigzag pattern. 1, 2, 3, 4, 5, 1, 2, 3. So here we start thinking zigzag pattern. But that zigzag pattern is not yet cooked. It's not yet well done. All right? It's just medium rare, so to speak. If you like American steaks, it's just medium rare. It's not well done. We want it to be well done. What do I mean? I mean, the pattern should be completed. But if the pattern is not completed, the price may print something else. That's why you need to be cautious. It's like amber lights. Yes, you have an edge. You saw it, 1, 2, 3, 4, 5, 1, 2, 3. It's correct to think of a zigzag pattern. Go one step at a time. There is a high chance that from this point onward, the price may print another one, 1, 2, 3, 4, 5 up. So you may wait. 1, 2. Now you are ready. 3. Pull back. You take it again. Up, step by step. If the price did something here, so you are here, you say, okay, 1, 2, 3, 4, 5, 1, 2, 3. So the price went up like this. So you were expecting 1, 2, 3, 4, 5, but the price did something like this. And then come back down. So it's no more a zigzag pattern in that case that you were expecting from here. Something else has happened. I hope I have clarified this matter about when we are dealing with a pattern or wave principle or wave pattern, one step at a time is the best approach. That the pattern is not, if the pattern is not completed, it's not that pattern. Am I making sense? All right, hopefully. To avoid that the video is too long, let's move away from that subject because our main topic, okay, is about how to identify a complex flat correction pattern like a genius. But I have a valid reason why I'm saying I'm dwelling a little bit on this subject of pattern not completed, pattern is completed, all right? And you're going to see it soon, all right? I'm trying to remove my lines from a chart. Once I finish, okay, we will start going a little bit deeper into a complex flat correction. Okay. The next thing I want to talk about again today, which I think is important for traders who care about the area wave principle, traders who are serious about area wave principle, is this, all right? When we learn about the area wave theory or principle, all right? It's a very exciting subject because it allows us to forecast the market, to have a bit of idea what the price is likely to do. Sometimes, especially when we are talking about a flat correction, it's a very gorgeous pattern because sometimes you can trade it all the way down and your forecast, your expectation will be fulfilled as you expected it. And you will feel like God. You feel like you are trading the wave principle like God himself. Okay? But another point I want to add to this is this. What we have learned about the wave principle in a classroom, all right, is different from what is going on in the financial market. Now, you have to understand that when somebody is writing about a specific subject, there are things that is, okay, so you are a writer or a publisher, you write something, you don't publish what you have written the first time. So you will edit that document, you will edit, and then when you are satisfied, you will publish your final products, okay? So, what we are learning in a classroom is the raw material. So those who care, we're talking about the area wave principle, teaching about area wave principle, cannot share all the information. It will take too long. So they will cut it down to the bone. They cut it down to the bone. Exactly what you need there, they will give it to you. But it doesn't mean that they don't know about other things that are happening in the market. They are aware of it. They know that sometimes things are not exactly okay, like we will expect it according to the wave principle. And this is one example here about a complex, a flat correction. So as I explained to you this morning, I recorded a video that I call how to avoid area wave analysis mistakes. And we see 1, 2, 3, 4, 5 waves. This is the multi-wave. And we see a double retracement 1, 2, 3, 1, 2, 3. So here at this point in time, we are thinking of a flat correction, and we will be expecting the price to come down in 5 waves. But there are times when the flat correction can be a complex flat correction. So the theory, this is what we are talking about, the classroom, all right, where we have lands, okay, is looking a little bit different. So you go on the internet, you learn about the theory, all right, area wave theory, everybody talking about the same thing and the same thing and the same thing. But there are other things happening. That's what I'm talking about on YouTube. Things that are happening in the financial market in real time. Then traders learn the theory, and then they face some challenges, and they wonder, what is this one? Well, what should I do? How do I handle it when the second wave cancels the first wave? How do we handle it? So this is what we are talking about here. So here we see a double retracement. We are thinking about flat correction. Now remember the first warning that I gave you, the pattern is not completed until it's completed. Look what has happened. After that double retracement, instead of, 1, 2, 3, 4, 5 move down, look, the price just went on if a sharp move down. Pew. Can you see? So if I was here, I would be expecting 5 wave down. But look, it's just pew down. So if you see like this, it's a distortion to a certain degree. You see this candle here? It's a long candlestick bar. So now I'm talking about another matter. It's a multi-talented trading. A sharp correction is a distortion to a certain degree. A long candlestick bar is a distortion to a certain degree. All right? So this stock went down from $140 straight away down to $70. Wow, 70. Okay, $70 price move in 1 month. Phew. If we go to the weekly chart, maybe it's not even in 1 month. Let's see how this went. Hopefully you can see. You see, in 1 week, look at this. In 1 week, look at this long candle on the weekly chart. Phew, down. 1 week. In 5 days, this 5 days price move. Look at this one. From in 1 week, it went down from $129, call it 130, all the way down to $76. 40 pips, $40 price move almost in 5 days. It's a distortion. Going back to my weekly chart, talking about a complex flat correction, how to identify a complex flat correction pattern like a genius. So now if you see this, a flat correction, you see 1, 2, 3, 1, 2, 3, a sharp correction, the bell should start ringing. Will it continue to go down? When you see like this, will it continue to go down? We talked about it already on another channel, the Pro Trader 24 Stock Trader channel. High volatility, low volatility. When we have a high volatility, is often alerting us that we may have, okay, a low volatility and possible reversal. It's there. It's a trading method. Sharp correction is often, more than 70% of the time, is followed by low volatility. So these long candles, there was a lot of volatility, high volatility. You don't need a VIX indicator here. The candlestick bar is telling you that the volatility was high. Here it is, high volatility. Look at the size of the candle that follow that. Small size, low volatility candle. These are small, low volatility candle. And also, a high volatility, low volatility, possible reversal. And here it is. After our 1, 2, 3, 1, 2, 3, a sharp correction, low volatility, reversal, price change direction again. So what's going on here? My friend, what has happened? We have 1, 2, 3, 1, 2, 3. We were expecting another 5 move down, but we have a sharp correction, which is a distortion to a certain degree. We have a high volatility followed by low volatility and a reversal. What has happened here? we don't have a double retracement, all right? We have what? Multiple retracement. So first retracement is 1, 2, 3 down. Second retracement, 1, 2, 3 up. Third retracement, sharp correction down. And the fourth retracement back to this point here. So instead of a double retracement, we have, okay, 4 times retracements. This is a complex, a flat correction. Now after the 4 times retracement, now we have the orderly 5 move down that we were expecting here. Here it is, 1, 2, 3, 4, 5. This one is not finished yet. The price can continue to go down all the way to the $10 zone to cancel the prior trend completely. There is a high chance that it may go and cancel it completely. One step at a time. Watch this level where we start counting the beginning of the first wave right here. Another thing I need to tell you, my friend, all right? Now, I will talk about it another time. Okay, I'll leave that one out now. Do you see now? So our normal orderly 5 move down is the blue section here. So I will highlight it with 2 vertical lines. This is, you will not learn this in a classroom, all right? About a complex flat correction of 4 times retracement. It can go up to 6 times retracement. Nothing can stop the price going down 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. So you may have multiple retracement before the 1, 2, 3, 4, 5 move down, but it does not invalidate, all right, the flat correction. But it does confirm that we do not have all the time a double retracement and a 1, 2, 3, 4, 5 move down. We may have multiple retracement before 1, 2, 3, 4, 5 move down, but it's still a flat correction, but in this case, a complex flat correction. This tutorial is about how to identify a complex flat correction pattern like a genius. So you see now, so now you see 1, 2, 3, 1, 2, 3. So you are here, you will be expecting, okay, a 5 move down. You will be surprised, my friend, as I demonstrate to traders in the video that I recorded today, how to avoid Elliott wave analysis mistake. Experienced traders did not count their first wave from here. Some of them did count it from here. Who cares? Who cares? If they are making money, that's fine. And then 1, 2, 3, 1, 2, 3 up, a double retracement. Believe me, some traders did count it like this: 1, 2, 3, 4, 5. So they thought that the flat correction has ended here. How do I know? That's a very good question. Remember, they counted like this. So their wave count start from here: 1, 2, blah, 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 5 up here, 1, 2, 3, 1, 2, 3. So they count 1, 2, 3, 4, 5. They say the flat correction has ended here. No, it didn't. The smartest wave practitioners saw it that it didn't. So now you see it went up again and it's pulling back down. How do I know? Look at the surge in trading volume. This one here. This one. The average volume, you see how people bought it here because they thought that the flat correction is completed here. I'm going to be recording another video again today, and I'll be talking about the moving average 200 and this flat correction again to clarify more points, because I don't want this tutorial to be too long. We want to be specific to the point, answering a specific question. So our intention in this tutorial is to answer the question how to identify a complex flat correction pattern like a genius. So the takeaway in this video, very important. A pattern is only that pattern until that pattern is completed. Very, very important. All right? The theory is maybe different from the reality of the market. So probably you have never heard about a complex flat correction. You do not know that we may have multiple retracement. Maybe you thought that we can only have a double retracement and 1, 2, 3, 4, 5 move down to complete the flat correction pattern. But here it is in front of us. The market is doing something else. It's clear if you understand more about the price action. There was a distortion here. This is a distortion. The market rectified that distortion. So in fact, this section here, let's call out the vertical line into red. Okay, between the two red vertical line or vertical red lines, you can see that this is in fact like a hole. A distortion was corrected. When there is a distortion, the market wants to correct it. Another thing that I clarify with traders that if you want to become a smart investor, remember high volatility is followed by low volatility and also can indicate a possible reversal. It's a typical, beautiful. Those who are trading this stock are not ordinary traders. These are smart traders. And they read the price carefully here. All right? All right? So we can consider this session here as a whole. What do I mean? It means that it's like it did not happen at all. Am I making sense? So normally, if we didn't have that, so normally the price should go after 1, 2, 3, 1, 2, 3. We should have our normal 1, 2, 3, 4, 5 on down. But because of that distortion, the market was forced to correct that distortion before we have 1, 2, 3, 4, 5 on down. Now, instead of a double retracement, now we have 4 times retracement. 1, 2, 3, 4. And then 1, 2, 3, 4, 4, 4, 5. A flat correction can become a complex flat correction if the retracement is not a double retracement, but multiple retracement. Can be 6, can be more. The market has many surprises, and one should be prepared for it. The most important thing is to keep eyes on the price itself, the number one indicators. This is the end of this tutorial about how to identify a complex a flat correction pattern like a genius. If you have any question or suggestion, this is the time to put it in the comment section, and in due course I'll record another video to answer your specific question. We are the GSTW24 traders talking about how to identify a complex flat correction pattern like a genius. Happy trading to you all, and speak to you soon.